Welcome back to Return My Capital. It is time for the best video of the week, the Dividend Roundup, where we cover any recently announced dividend changes, dividend increases or decreases, hopefully no eliminations. We'll then get into upcoming ex-dividend dates for the week ahead. This is going to be for the week of April 28th to May 2nd. And then we'll finish off with companies that are actually going to be paying distributions in the week ahead. So do this video weekly, put it out on Sunday so that you can keep in tune with what's going on with your individual stock holdings. That being said, let's jump right into any recently announced dividend changes. We've got a company, ACNB Corporation. I'm actually not too familiar with them. Let's take a look at ACNB. So they did announce a dividend increase of, let's see here, dividend increase of 6.25. And what does ACNB do? Let's see. Okay, it's a financial, looks like a regional bank. What does ACNB been? Oh, wow, it's actually up 23% over the past year and up 3% on the year. So holding up better than the rest of the market, certainly year to date. ACNB is going ex-dividend on May 30th, paying out June 13th. They were paying 32 cents a year, now paying 34 cents a year. So 6.25 increase. 3.3% yield, and they've been paying a dividend for 8 years. We've got Ameriprise Financial, ticker AMP, real nice 8% increase, now yielding 1.4%, 21 years of payouts, going ex-dividend on May 5th. We've got Avery Dennison Corporation, a bit of a, let's say, manufacturing conglomerate, but a real solid manufacturing company, ticker AVY, 7% increase to that dividend, 2.2% yield, 15 years of payouts, so 88 cents to 94 cents, and they're going ex-dividend on, let's see, June 4th. Let's take a look at AVY, Avery Dennison. I think they've been getting beat up. Yeah, down 21% over the past year. They've run into some issues. Certainly, they're the type of company that could be impacted negatively by any type of tariff. Let's see here. 5-year CAGR, 8.7%, 14 years of dividend growth. Yeah, not too bad, $3.52. Beautiful dividend growth history chart. 2014, they were paying $1.34. 2024, paying $3.45. Moving along, we have, let's see, MetLife, ticker MET, Met. They'll be going ex-dividend on June 6th, paying out, May 6th, paying out June 10th, and a 4% increase for MetLife, a big insurance provider, financial, 3% yield on MetLife. We've got NASDAQ, ticker NDAQ, so the company that actually produces the NASDAQ index that a ETF like QQQ tracks. Real nice 12.5% dividend increase, 24 cents to 27 cents, a 1.43% yield, and they won't be going ex-dividend and paying out that next distribution until June. Let's see how NASDAQ has held up lately. Some of these indexing companies really are nice investments, up 25% over the past year, down 2.5% year to date. 102% over the past 5 years. I bet you they have nice dividend growth history. Let's take a look. Oh, 5-year CAGR, yeah, 9%, 12 years of growth. God, yeah, look at that dividend growth chart. 2014, just 19 cents per share, up to 94 cents per share 10 years later. Just phenomenal. What other increases do we have? Otis Worldwide Corporation, ticker symbol OTIS, Otis. They announced a 7.7% increase, bringing that yield up to 1.8%, 39 cents to 42 cents. I believe this company was spun off, or perhaps it was a combination of Raytheon and, oh my goodness, what was that? It was when Raytheon changed to the RTX ticker symbol. They spun out, I believe it was Carr and Otis. I think Otis is the elevator company, elevator manufacturer. And I believe both Otis and Carr performed well after the spin out. Yeah, I mean, over the last 5 years, Otis is up 93%. Let's see, manufacturing, installation. Yep, elevators and escalators. So not an industry that you, or a product or industry you think about too much, but Anytime you've been out in public or gone to a hotel or gone to an office building, Otis is one of the biggest players in the elevator space. Moving along with the dividend increases here, which is always welcome news. We've got Principal Financial Group, ticker symbol is PFG, just a 1.3% increase, 75 cents to 76 cents, but the yield is at 4.14%, 17 years of distributions for PFG. Let's take a look at PFG. I think they're an insurance provider. Let's see, asset management, insurance products, retirement. So just an asset manager. These can certainly be solid dividend growth plays. 5-year CAGR of almost 6%. Pretty solid dividend growth chart there. 2014, $1.28. 10 years later, $2.85. What else do we have for increases? We've got Parker Hannifin Corporation, ticker symbol is PH, a whopping 10.4% increase, bringing that dividend yield to 1.2%. Just 69 years of dividend increases for this dividend king. So $1.63 moving up to $1.80. Parker Hannifin, almost 70 years of dividend increases. Good golly. Yeah, they're just up 400% over the past decade. No big deal. What is Parker? Motion and Control Technologies, industrial and aerospace markets. Good golly, 400% over the past 10 years. Not a company you hear too much about, but a dividend king. They've been around for 100 years. Revenue looks like it's going to be a little flat for the next few years, but man, oh man, has it been a beast. Extremely profitable, net income margin almost 16%. Healthy enough balance sheet. You know what's incredible is when you see a company that's been paying a dividend distribution for 70 years and the payout ratio is still under 25%. I mean, that's just incredible. 5-year CAGRs over 13%. Incredible. Unbelievable. 2014, they were paying $207, now paying $637 a share. Incredible. Shares trading for $600, middle of the 52-week range. Wow. Moving along, we've got Phillips 66, ticker symbol PSX for this energy company. Bumped that dividend from $1.15 to $1.20 for a 4.35% increase. That yield now stands at 4.6%. We've got the Southern Company, big time utility, maybe the largest utility. I haven't looked into that, but they may be. Bumped that dividend 2 cents per share from 72 cents to 74 cents. Just a 3% increase, let's say, really a 2.8% increase, but that yield now stands at nearly 3.3% for this dividend aristocrat. You've got Cisco Corporation, ticker symbol SYY. Moving that dividend from 51 cents to 54 cents, almost a 6% increase, 3% yield. Dividend king, 55 years of dividend distributions. I talk about them because it kind of cracks me up that you've got Cisco, the SYY version, and then Cisco Systems, the CSCO. So anyway, this Cisco, restaurant goods, prepackaged foods, restaurant equipment, uniforms, stuff like that. But they are a dividend king. Made a video about all the dividend kings. I'll link to that in the description of this video. But 3% yield there on Cisco and a 6% increase. You've got, I'll wrap it up on this one. You've got a company called Value Line, ticker symbol value, VALU. And they announced a 8.3% increase for a 3.3% yield, going ex-dividend in just a couple days here on April 28th, and will be paying out on May 12th. I'm not familiar with Value Line here. Let's take a look. Up 8% over the past year. No short interest, 0.16%. What does Value Line do? Investment periodicals and related publications. Interesting. So it's a let's say content producer for financials. So interesting. Company research, small and mid cap. Very cool. So they provide information around different types of investments. 8.5% 5-year CAGR. Yeah, not too shabby. Interesting. Okay. So, with that in mind, that covers all the dividend increases. Actually, a pretty nice little list for the week ahead here, April 28th through early May. And that's always great news. So, we will move on to upcoming ex-dividend dates for the week ahead. So, companies that I talk about on Monday, the 28th, will be companies that are going ex-dividend Tuesday, the 29th. So if you want to participate in the upcoming distribution, you need to own these companies by close of business on Monday, the 28th. And starting things out there, we've got Bank of Montreal, ticker symbol BMO. They will be paying out their next distribution on May 27th. It'll be $1.59 Canadian. Shares are currently $95, a 4.8% yield on that Canadian financial. You've got HB Fuller, ticker symbol FUL. They'll be distributing on May 13th, 23.5 cents per share. Shares are just under $55 right now, so a 1.7% yield. 56 years of distributions for HB Fuller. It's a Freightliner. You'll see their trucks. I was actually just on a trip and saw several HB Fuller semi-trucks. Oh my goodness. I'm sorry, I'm getting this mixed up with JB Hunt. HB Fuller is actually a material. So sealants, adhesives, coatings. Yeah, I messed that one up big time. My apologies. HB Fuller, 55 years of distributions. Still only a 24% payout ratio. Talk about a sustainable business model for long-term growth. In 2014, HB Fuller here was paying a distribution of 46 cents annually. Now we're up to 87 cents. Okay. Well, that's HB Fuller. Again, next distribution will be on May 13th, and they're going ex-dividend on Tuesday, meaning you need to own them by close of business on Monday if you want to participate with this Dividend King. Wrapping things up for companies on Monday, we've got Constellation Brands, ticker symbol STZ. Their next distribution will be May 15th, $1.02 per share, although shares are $185, so a 2.2% yield on that company that owns many of the leading spirits, wines, beers, other alcohol products. I also did a video on it was comparing Constellation Brands with Samuel Adams, with Anheuser-Busch InBev, and I believe Coors. I'll link to that down below as well. Moving along for Tuesday, April 29th. Need to own these by the end of Tuesday because their ex-dividend date is Wednesday the 30th. We've got A.O. Smith, ticker symbol AOS. Their next distribution will be on May 15th. 34 cents per share coming your way. Shares are $65. A little over a 2% yield on A.O. Smith. 31 years of distributions for that dividend aristocrat. And I believe they are in heating, like water heating systems for homes, basically water heaters. Let's see, residential and commercial gas and electric water heaters, boilers, heat pumps. So a very non-consumer facing, although if you own a home, I guess it's consumer facing, but essentially you don't naturally think of building products and things like that. So it's been around, just since 1874. So it's been around a while and certainly has been a steady performer. Payout ratio, just 35%, 5-year CAGR, 7.5%, 30 cents in 2014 on that annual dividend. Now here in 2024, $1.30. They actually got dinged recently because I think they are heavily exposed perhaps to Chinese manufacturing. So, and perhaps even distribution of their products back into, say, emerging markets, but back into a place like China. And so I think they've actually gotten hammered by the current environment with some of the tariff talk. Yeah, year to date, down 5%, down 21.5% over the past year. Moving along with companies you need to own by the end of Tuesday if you want to participate in the upcoming distribution. We've got EPD, that is the ticker symbol. It's Enterprise Product Partners, and their next distribution will be on May 14th, 53.5 cents per share, almost a 7% yield. Shares are trading for $31, 28 years of distributions. And EPD is a oil and gas pipeline company. The distributions on this are not your typical qualified dividend because this is an MLP. So if you ever invest in an MLP, There are different potential tax implications. But that being said, of the MLPs, certainly EPD is one of my favorites. Very, very sustainable business model. Yeah, energy from natural gas and crude is not going anywhere. You'll see the higher payout ratio. You can think of a company like this similar to a REIT, where essentially they own pipelines and they're a toll booth on the product that passes through their pipelines. Moving along for Tuesday the 29th, we've got Kinder Morgan, ticker symbol KMI. They'll be distributing on May 15th, 29.25 cents per share. Shares are just under $27, so almost a 4.4% yield on KMI. KMI may be similar to EPD. Let's see. Yep, energy infrastructure company. And I don't know for sure. Let me see. Payout ratio almost 100%. Yeah, so KMI, I don't know for sure, but I assume that they are similar to EPD in that they are also a, whatever the heck, different, not a qualified dividend. Okay. We've got Morgan Stanley, and their next distribution will be on May 15th as well. 92.5 cents per share. Shares are 116, a 3.2% yield on Morgan Stanley. What else do we have for Tuesday here? Stag Industrial, ticker symbol Stag. May 15th distribution, a 4.5% yield, $33, let's say, per share, 15 years of dividend distributions. Stag's a large warehouse REIT. So e-commerce, logistics, shipping, the owner of those facilities, or I should say landlord of those facilities, is a company like Stag. We've got Texas Instruments, ticker symbol TXN. Next distribution will be on May 13th, $1.36 coming your way. Shares are just under 163, 3.3% yield for Texas Instruments. And that'll wrap things up for companies that you need to own by close of business on Tuesday the 29th. Moving right along to Wednesday, April 30th, because these are companies that will be going ex-dividend on May 1st. We've got the AES Corporation, ticker symbol AES. Let's see, May 15th payout, 17.5 cents per share. Shares are $10, so a 7% yield. We've got, what else do we have for Wednesday here? Realty Income. Maybe you've heard of it if you're a dividend investor. Your favorite monthly dividend payer, ticker symbol O. May 15th, 26, almost 27 cents per share. Shares are $57, up to a 5.66% yield on Realty Income. Let's take a look at Realty Income. How have they been doing year to date? Wow, fantastic. Up 6.5% year to date, far beating the market. Up 6% on the 1 year, 10 years, or 5-year performance is certainly underwhelming at 11% and just 21% on the 10-year. Strictly from a share price appreciation perspective, got to factor in that nearly 6% dividend yield for this very, very popular REIT. Let's see single digit growth expectations. Anyway, moving along, Thursday, May 1st, got to own these by the end of Thursday if you want to participate, because these companies' ex-dividend date is Friday, the 2nd. We've got Carrier Global, ticker symbol CRR, CAR. And so CAR and Otis, those were the two companies I was thinking about earlier that got split out from Raytheon when Raytheon, essentially RTX, became solely the aerospace company that it is today. UTX, that was the other company out that played with Raytheon. What was it? Was it a UTX and a RTX merger? Let me know in the comments if you know what I'm talking about. But it was something with Raytheon and United Technologies, and then there was the split out of the 3 different companies. One was Raytheon, one was Otis, and one was Carrier. CAR is the ticker symbol. May 22nd will be the next distribution. 22.5 cents per share will be the distribution for Carrier Global. Those shares are currently trading for $60, a 1.5% yield on Carrier. Let me refresh my memory. So we talked about Otis. Okay, Carrier is HVAC. So, I mean, You talk about two types of products and business verticals that don't get a lot of attention, but are absolutely critical for any building. You're talking about elevators and escalators with Otis, and now here with Carrier, you're talking about HVAC systems, so heating and cooling. Not the sexiest products, but critical products. Let's see how Carrier has done over the last 5 years, because that's about the time it split out. Oh, just 257.5%. Unbelievable. Okay, so yeah, those two companies, Carrier and Otis, they split out March of 2020. So right when the pandemic was starting. And it split out at $12.75 a share, now up to $60 a share. God, what performance. That really worked out well. Up to a 52 billion market cap. What's the dividend metrics on this thing? Look at that EPS. Expectations for the next 3 years of 16.5%, 14.5%, 11.5%. Solid profit margins, net income margin of 25%. Pretty healthy balance sheet. Dividend yield 1.5%, 28% payout ratio. Yeah, it's just been a nice little. If you owned United Technologies prior to it splitting out into Raytheon, Otis, and Carr, and you held all three from that split out, you're probably pretty happy with how that worked out. So we've talked about Otis and Carrier. How did RTX do since the split out? So you see here, yep, 2020, RTX was up here well above 150 after the split. Came down here to $50, now at 125. It's done well enough over the since that change, up 92% over the past 5 years. Yeah, sorry for the little side tangent here, but just interesting. Okay, so moving back into ex-dividend dates for this week of April 28th to May 2nd, May 3rd, May 2nd. So we just talked about Carrier. What else do we got for Thursday, May 1st here? We've got Costco, ticker symbol COST, COST, one of the best performers in the market over the last 10 years, no doubt. Next distribution will be May 16th, $1.30 per share. Shares are almost $1,000, so just over a 50% yield, or 50% yield. 22 years of distributions on Costco. Let's see, how has it done over the past decade? Good God, 572% on the 10-year, 216% on the 5-year. Now, if you're unfamiliar, you're probably not because it's well covered, but Costco is unique with how they do their distributions. I mean, you're not going to see too many dividend growth history charts like this. So yes, you see the increasing typical annual dividends, 138 in 2014 to 175 in 2016, 221, 252, 307, 349, 450. So those are your typical annual increases, but then you see these spikes every few years, and people get excited about these, as would I if I owned Costco shares individually. But these are their special one-time dividends that they do every few years. So in 2015, it was $6.56 annual distribution, $8.95 in 2017, $12.75 in 2020, and almost $19 in 2023. So yeah, kind of a cool strategy or whatever you want to call it with Costco. What else we have for Thursday? We've got DR Horton, ticker symbol DHI. May 9th is the next distribution. Again, this is for an ex-dividend date of May 2nd. That will be a 40-cent distribution, let's say $125 per share, 1.3% yield for DR Horton. Nothing else I want to hit on for Thursday the 1st. We'll move to Friday, May 2nd. So these are companies that you need to own by the end of the week because their ex-dividend date is next Monday, 2 Mondays from now, May 5th. So for Friday, we've got Ameriprise Financial, one of the companies that we covered at the start of this with the dividend increase. But their next distribution will be May 19th, $1.60 per share. Shares are $466, so nearly a 1.4% yield there. You've got Eaton Corporation, ticker symbol ETN, May 23rd, next distribution, $1.04, $289 on that share price for a just under 1.5% yield. Anything else for Friday? No, well, sure. We'll go with Pinnacle West Capital here, PNW, June 2nd, 89.5 cents per share, almost a 4% yield, and shares are just under 94 bucks. All right, that wraps things up for the ex-dividend dates in the week ahead. We'll close this thing out with companies paying a distribution in this week ahead of April 28th to May 2nd. So this is always exciting when you can expect a dividend coming your way. So what do we have for this week? We've got ABM Industries. ABM is the ticker. May 5th, so really that's 2 Mondays from now, but 26.5 cents per share, 2.2% yield. You've got Bank of New York Mellon. BK is the ticker. Let's see, May 2nd payout, so Friday, 47 cents per share coming your way. Bristol Myers Squibb, ticker symbol BMY. May 1st, Thursday, 62 cents per share, 5.2% yield for Bristol Myers. They're a big pharmaceutical, right? Over the past year, up 7%, kind of hammered down 15% year to date. Just a 7 price to earnings forward on this $100 billion company. Man, oh man, some of these pharmaceuticals have absolutely been hammered since the new presidential administration has been in place, concerns over RFK and how he'll respond towards the pharmaceutical industry as a whole. Let's see. Man, oh man, earnings are choppy for Bristol Myers right now. I guess that makes sense why shares are trading on a 7 forward price to earnings ratio. Not a bad dividend picture though. 5% yield as shares have been beaten down, 33% payout ratio, 7.25 on the 5-year CAGR of that dividend. It's been choppy. Interesting. Maybe something to consider if you don't mind investing and taking that single stock risk in the pharmaceutical space. What other distributions do we have this week? We've got Dillard's, ticker symbol DDS. Maybe you've seen their stores. Maybe you shop at their stores. May 5th will be the next distribution. So 2 Mondays from now, 25 cents per share, just a 0.3% yield. We've got EOG Resources, ticker symbol EOG, paying out on May 30th, 97.5 cents per share, 3.4% yield. GFL Environmental, 4:30 payout, so that'll be Wednesday, just 1.5 cents per share, a 0.1% yield. Why even pay it? Let's take a look at GFL Environmental. Oh, geez, oh, Pete, it's up almost 52% over the past year, 220% on the 5-year. Just went public in March of 2020. Is this like a waste management? Yeah, let's see, non-hazardous solid waste. Okay, so yeah, GFL here is very similar to a waste management. It's trash collection, it's recycling. Yeah, certainly a very stable business, very, very richly valued and very minimal dividend yield. But yeah, that's GFL paying out this week ahead. We've got General Mills, ticker symbol GIS, paying out on May 1st, Thursday, 60 cents per share, 4.3% on that consumer staple. Very popular products from breakfast cereals to snack bars and many others, I'm sure. Let's actually... Here, let me take a look at what some General Mills products are. I'm sure it's an impressive list. Let's see, 100 brands across the world, it says. Oh, I didn't know that they owned the Annie's brand. Let's take a look at their brands here. Let me add this. What do we have here? We've got Annie's, Autumn's Gold. I'm not familiar. Betty Crocker. Yeah, maybe you've heard of that one. Blue Buffalo. That was a big acquisition they had done a couple years ago. Big pet food brand. Bisquick, Certainly grew up making Bisquick pancakes. Bugles, there's a snack I haven't had in a while. Chex, Cheerios, Chex Mix, that's a lovely snack. Cinnamon Toast Crunch, nice. Cookie Crisp, Cocoa Puffs, Dunkaroos. Epic, I've seen their like beef jerky snack bars. Gardettos, those are awesome. Fiber One. Don't eat too many of those unless you want to have a long day on the toilet. Golden Grams. What else we got? Green Giant, I didn't know that. Haagen-Dazs, oh yeah. Larabar, whatever the heck. Kix, Lucky Charms, Old El Paso, I haven't heard of that one. Nature Valley, Pillsbury, let's go. Progresso, man, oh man, they have a lot of brands. Reese's Puffs, Raisin Nut Brand, Total, nice. Trix, Totino's, okay. Wheaties, Yoplait. So yeah, that's General Mills paying their distribution this week on, what is that, Wednesday, May 1st? No, excuse me, Thursday. General Mills paying Thursday, 4.3% yield, 60 cents per share. Oh man, I've had a lot of tangents on this one. JP Morgan, ticker symbol JPN, the top dog in the financial space. April 30th, $1.40 per share, 2.3% yield. Altria Group, ticker symbol MO, April 30th, $1.02 per share, 7% yield on that. I mean, if you're a high yield investor and you're not opposed for your own reasons investing in a sin stock, it doesn't get much better than Altria. People aren't going to stop smoking cigarettes, consuming nicotine products. Yeah. Actually, all of those have performed unbelievably well over the past year as people have shifted from some of the growthier names to some of the more stable, high yield names. We've got PNC Financial Services Group, ticker symbol PNC, May 5th. So actually 2 Mondays from now, but $1.60 coming your way, 4% yield on that financial. You've got Pentair, ticker symbol PNR, May 2nd, 25 cents per share, 1.1% yield on Pentair. I've heard of Pentair before. What do they do? What have they done? Okay, water solutions. Flow, water solutions, and pool. Oh, okay. Maybe I heard of them in relation to pool products. I don't know. 1.1% yield, 21% payout ratio. Okay. Well, they're paying this week. We've got RPM International, ticker symbol RPM, paying out on April 30th, 51 cents per share, 2% yield. Stryker Corporation, SYK is the ticker symbol, also paying out on the 30th, 84 cents per share, a 0.9% yield. What does Stryker do? Okay. 365 on the share price, up 8% over the 1 year, 90 on the 5 year, 300 on the 10 year. Wow. Is it financial? Healthcare. Okay. Med-surg, surgical, neurotechnology, orthopedics. Nice. Probably a big player in medical devices. I don't know. Only a 26.5% payout ratio with an 8.5% 5-year CAGR, 15 years of dividend growth, healthy balance sheet, beautiful growth history, dividend growth history chart. Yeah, might have to get more familiar with them. Toronto Dominion Bank, ticker symbol TD, April 30th payout, $1.05 Canadian, almost a 5% yield on Toronto Dominion. Trinity Industries, ticker symbol TRN, April 30th, 30 cents per share, 4.8% yield. UDR, ticker symbol UDR, April 30th payout date, 43 cents per share, 4.2% yield. What is UDR? Anytime a company is named the same as their ticker symbol, I want to know what they do. Price to FFO, okay. 25% on the 10-year. Okay. Multifamily residential. So apartment REIT, which explains the price to FFO metric, also explains the poor share price performance, but Not a bad little 4% dividend distribution. Okay. Moving along from UDR, we've got Universal Corporation, ticker symbol UVV. We talked about Altria earlier. UVV is involved in the similar industry. May 5th payout, 81 cents per share and a 5.6% yield on Universal there. We've got Verizon Communications, ticker symbol VZ, needs no introduction. May 1st payout, almost 68 cents per share for a 6.5% yield on Verizon. Golly, I wonder if Verizon's going to have a dividend cut in the next couple of years. 9 forward price to earnings. 6 point, golly. I mean, at least they have EPS and sales growth, and it's not negative. It's certainly not anything to get overly excited about. But really, the concern here is, I mean, I know it's a unique industry, but they almost have as much debt as their entire market cap. 167, almost $168 billion in debt for Verizon. At least the dividend payout is under a 60%. 2% growth on the 5-year CAGR for the dividend. I mean, if you're buying a company like Verizon, you're essentially buying it as a bond proxy, right? I mean, 5-year down 27.5%, 10-year down almost 17%. Brutal. Wrapping things up with just a few more companies that are paying out this week. We've got WD-40 company, WDFC. You probably don't need to guess too many times to figure out what product they make. April 30th payout, 94 cents per share, 1.7% yield. Winnebago Industries, ticker symbol WGO. April 30th payout, 34 cents per share, 4.2% yield. They make the camper vans and RVs. And finishing things out for this week, we've got Watsco, ticker symbol WSO, April 30th, $3. $3 on that distribution coming your way, 2.6% yield. Their share price must be substantial. Yeah, $456 a share, done unbelievably well on the 5-year, up 182% and 276% on the 10-year. Although, interesting, it is trading down on the 52-week range. 456 today. 52-week range is 439 to 571. Interesting. Yeah, back in November, they were up there at 570, now down at 456. Still richly valued. Golly, $12. I mean, I know it's, 3 times 4, it's obvious, but $12 on the annual dividend, 7.5% short interest, though. That's substantial. What is it? Air conditioning, heating, refrigeration. Okay. Love the industry, but not terrible EPS growth expected. Margins are okay, good, not great. Okay, yeah, payout ratio is, let's say, pretty unhealthy. 83% payout ratio on that dividend. It's interesting to see that they've been growing their distribution at an 11% clip over the past 5 years, but their payout ratio is at 83%. That doesn't sound super healthy. Balance sheet isn't terrible. Same amount of debt to cash of 400, or oh my goodness, let's just say 450 million for both. Good golly. Yeah. All right. That closes things out for the dividend increases, the upcoming ex-dividend dates, and the dividend distributions that you can expect for the week ahead, April 28th to May 2nd. Launch this video every Sunday. Just, oh my gosh, sorry, my voice is tired. Every Sunday, we do the dividend roundup so that you can stay in tune. You can get the exciting news on dividend changes and know who's going to be paying you for the week ahead. Hope you enjoyed it. Thank you very much for watching. If you don't want to miss these because you enjoy the info or you get whatever you get from it, please like, please subscribe. Thank you very much. Take care. Bye-bye.